días. Presentamos el noticiero de MinerAndina, su informativo semanal minero por streaming, con las principales noticias de la semana que pasó, que fue corta, post Semana Santa, y una entrevista exclusiva con Jeff Killen, director de la Prospectors and Developers Association of Canada, PDAC, en una conversación sobre algunos impactos y resultados del evento minero más grande del mundo, que tuvo lugar en Toronto a inicios de marzo. Palamina recibe aprobación para perforar en su proyecto Usicayos. SilverX anuncia informe técnico para nueva recuperada. PPX Mining anunció resultados adicionales de pruebas metalúrgicas. Latin Metals descubre pórfido de cobre y skarn en Aukis. Lara amplía su huella mineralizada en el proyecto Kenita. MinerAndina Internacional. Autoridad minera por dirimir diferencias sobre contrato. Minera Panama First Quantum.
Well, now we are with Jeff Killen. He is Director of Policies and Programs from the PDAC, and we would like right now to have a short conversation about financing. That is a very interesting and critical issue in the last years, mostly in the middle of the pandemic. Jeff, happy to meet you by here by our program. So tell us briefly, comment how was the flow of financing to the exploration projects? How has it changed during the pandemic? And now how it is currently? Because we know that during the pandemic the financing was not reduced, right? So tell us a bit from a couple of years ago, and how is it now in these times?
Sure, thanks. And that's a big question, so I'll do my best. And if we look back to 2019.
Okay, go on.
Thank you. So casting my mind back to, thinking back to 2019, so pre-pandemic, and where was the state of the market at that point? It was really at a low point. 2019 represented the low point for equity raised, or the amount of funds, the amount of new investment going into the mineral industry year over year for a decade and previous. And so we did see things improve actually between 2019 and 2020 as we were entering the pandemic to a small degree, but as I would suggest, as we were exiting the pandemic and later in 2021, we really saw the market start to accelerate, and we did see financing rebound in 2021 to mark, at least in terms of equity coming into the sector, the second highest point we've seen in almost 10 years. So, there was very much a short-term impact that we saw as a result of the pandemic on just general sector investment and activity in the market, but that definitely we saw a rebound very quickly into 2021. That being said, though, we have definitely seen a palpable slowdown last year, 2022. There was a heel turn in terms of activity, whereby it was about half the amount of investment going into the sector in 2022 was only about half of what we saw the year previous in 2021. So we're coming into 2023 having realized a real market slowdown in terms of investment into the mineral industry, but that does link, I would suggest, fairly closely to the general market slowdown we saw in the broader marketplace. We saw major indices down 8 and 10 and 15% in some cases. So, the mineral industry wasn't shielded from that.
Oh, interesting. So, are we talking of a slowdown on the cycle, or it is a contra cycle? What kind of picture are we looking?
Well, I think what we saw in last year, in particular, 2022, were a number of headwinds kind of coming together, and as a result of inflation that people were seeing both within Main Street and within the marketplace, interest rates starting to move higher, that really put a headwind against the amount of risk capital or the amount of general investment capital that often comes into the mineral industry, and in particular to the mineral exploration segment of the mineral industry. It really relies on that risk capital pool to be able to generate that new investment. And as interest rates were climbing, as the overall marketplace valuations were declining, we see that risk capital moving away from it's just the pool shrinks and becomes less available for the sector. So that certainly had an impact last year. If we take a step back and think about the metals complex, in general, last year was positive for a few metals, but overall, we saw gold down just under 1%. We saw iron ore was down, copper was down, zinc was down, and an interesting split between the battery metals last year. Two of the principal battery metals, where lithium was still up over 200% in the year, but cobalt was actually down for the first time in a number of years. So, there's a bit of a mixed bag in terms of the commodities sector or the commodity space, but certainly there wasn't a lot of a kickstart from a fast-moving commodity on the upswing to help reinvigorate the investment side of the marketplace.
Interesting. So, for you, when we look from the last years, how you can briefly explain the shift of preferences from the financing sector? No, it's a shift from A to B, or from A to B to C. The highlights, please. What are these highlights?
Yeah, I'll do my best. And so a couple of highlights. I mean, we've definitely seen, as I mentioned, things start to slow down in the investment side of the market in 2022. And that's likely to translate into the exploration side of the business in 2023. Money raised last year often flows into the marketplace or into the ground the year later. So, we're expecting to see overall activity on the ground around the globe slow down this year as that investment pace fell last year. The one thing we have seen in Canada, though, is we have generally been more shielded from those types of marketplace slowdowns because we have, arguably a couple of really critical pieces here in Canada: the flow-through share regime. We have a mineral exploration tax credit. We also have a relatively new critical mineral exploration tax credit that helps to increase the incentive for new investors to put money into the sector, and we're seeing those start to take effect. So as I'm suggesting, we've seen NRCan, Natural Resources Canada, their new estimates for exploration activity in Canada for this year, and it does suggest we're going to see, about a decline of about $300 to $400 million year over year in terms of dollars going into the ground. That being said, we're continuing to see the amount of dollars going towards rare earths, lithium, cobalt, graphite, some of those critical or battery metals continue to climb, and quite significantly. If we think back to just 2020, there was only about $35 million spent in Canada looking for lithium, graphite, cobalt as a suite of metals. And in looking at this year's forecast, that's almost $300 million. So we're seeing almost a tenfold increase there. So I think, the incentive package that we're trying to develop in Canada to boost our competitiveness is having an effect. And I think you'll probably see some other governments around the world, as they're taking on critical mineral strategies, those things are going to start to play into how the market thinks of where to put money in the next 3 to 5 to 10 years.
Okay. And the sources of financing are the same? Also, they have had some changes, or are the same through these years, or some changes?
Very good question, and trying to go from just the high level down, maybe. If we look back to, say, 2018 or pre-2018, there was still more active investment dollars in the marketplace. So funds that were underneath a portfolio with a portfolio manager who was looking at the marketplace and meeting with management teams and making decisions based on those types of activities. It's been several years now where we've seen the passive investment, the volume of passive investment overtake active investment in the marketplace. So that means it's more ETFs, it's more pooled funds, and in some cases funds that are being directed by algorithms or other types of influences. So that means there has been generally less investors for the mineral industry, and particularly for mineral exploration companies to try and reach out to in the world, whether that's in the institutional, pension funds and that sort of thing, or even just the sort of mid-money market managers that run family offices and those sorts of things. They've really moved away from investing in specific stocks, and so that's made it challenging as an overall pool for the industry to try and tap new investment. And I think, again, coming back to those incentives I was referring to, I think that's why it makes those so important to try and incentivize investment to come into this sector, because the odds are challenging to see a mineral exploration project actually reach a mine and see that equity value come back to the initial investor.
And other interesting thing in Canada for me is the flow through shares. No, in my country there is, I don't know if in South America isn't anything similar to the flow through shares. So could you be so kind to explain us shortly, what does it mean, the flow through shares? How does it work? And I think that during the pandemic, the flow through shares has not stopped, right? So it's always gone. So please, and how flow through shares maybe help to the financing of your exploration sector in Canada, no?
That's right. It's an essential part of financing mineral exploration in Canada. So before I get into the specifics on what is a flow through share, to think back to the last 2 years, there's been about $2.5 billion raised through flow through shares for mineral exploration that must occur within Canada. So that's the idea. It's an incentive to help generate more activity within our borders. So what is a flow through share? As companies are doing activities on the ground, they're spending money, they're incurring taxable benefits as a result of spending that money. So they're deferring those benefits to the investors. And so for those folks that are looking at the marketplace, they've got money to invest, it's a way for them to put money into the marketplace and defer some of their income. It lowers the actual amount of tax they pay in a year, and they are also able to buy that stock at a much lower, effective price for their own purposes. So when we think of a flow through share, if you were to say buy $1,000 of new equity being released in terms of a flow through share issuance, it might be in dollar value to the investor. It might only be an actualized cost of about $400 or $500, or maybe even less if there's some provincial incentives that go on top of that. So it's a really effective way to try and usher in new investors into the sector. And the benefit that the government and the public realizes off of this is that there are specific requirements around it. So funds that are raised through a flow through share must be spent within 18 months. They must be spent in Canada, and they must be spent explicitly for mineral exploration to define a new resource. So it's helped, the idea is it's supposed to incentivize and kickstart the upstream portion of our industry, build our natural resource wealth to then, see more mines that eventually built here in Canada.
Very, very, very interesting. So your forecast for this year, for a little forecast, no, about how do you see the sector and the money, and if can we expect a bullish time?
Well, I always think, and if you look at our mineral finance report, you can find that on the PDAC website. It's free for everyone to review. We always start with metal prices, and so obviously the metal price, the commodity complex, has a huge influence on the investor interest for mineral exploration, for mining. And just today we saw gold increase, I think $40 or $50 an ounce just today alone, right? So certainly we're not being, don't have the crystal ball in terms of understanding what metal prices will do this year, but we know that their direction will generally drive the activity in the marketplace. Like I say, last year we saw some major headwinds in the overall market that really helped to slow down the pace of investment. Those seem to be curtailing or, pulling back a little bit this year. The overall market is performing better. So, taking that in stride as well, we would think that we could see the market begin to heat up over the course of 2023. But again, we'll really point our minds to the metal price complex and see where it's going to help direct us. From a short to midterm perspective, I think there's still a lot of uncertainty around base metals, and some view that it may be as far as 2027 before there's a real firm hold by the long-term demand structure that's likely to be formed from electrification and there's estimates out there 20 or 30 times the amount of copper or nickel is going to be needed on an annual basis. Well, those are still fairly long-term and not quite grabbing onto to taking the prices in a north direction yet, but we know that that's in the long-term view. So keep that in perspective, I guess. Okay.
So Jeff, thanks a lot to be with us. Thank you to be in our program. A very, very interesting focus on financing, on exploration projects. Bueno, amigos, ha sido una interesantísima conversación, mucha información sobre el tema de financiamiento de los proyectos de exploración a nivel global y en Canadá. Agradecemos a Jeff, muchas gracias. Thank you so much, Jeff. Y será hasta la otra oportunidad. Hasta luego. Bye. Thank you.